All right, let's talk about something we all love, getting a bonus. But then comes that tricky part, right? The taxes. When do you actually pay them? It can feel like a real puzzle, but don't worry, we're going to solve it together today.
So here's the classic situation. Your company tells you in December, hey, great job, you're getting a bonus, but you don't actually see that money in your bank account until, say, February of the next year. So which tax year does that belong to? Is it for the year you earned it or the year you got paid? Well, the answer is kind of weird. It actually depends on who's asking, you or your employer.
Yeah, it's true. It's almost like you and your employer are living in two totally different tax worlds. You guys are on completely different timelines, and once you get that, the whole puzzle starts to make a lot more sense.
Okay, so here's the breakdown. For you, the employee, the government cares about what's called a cash basis. Basically, when did the cash hit your hand? But for your employer, the business, it's an accrual basis. That's all about when they committed to the expense, not when they paid it. Two totally different rule books for the exact same bonus.
All right, let's dive into your side of things first. The rule for you is actually super straightforward. It's all about one thing: follow the cash. Let's break down exactly what that means.
So what is the cash basis? Well, it means income is taxable in the year you actually get it. It doesn't matter when it was announced, it doesn't matter when you earned it. The only thing that matters is the year the money was physically in your bank account, or at least made available to you.
And that right there answers our big question from the beginning. If you get the cash in year 2, it's income for year 2. End of story. Think of it this way. It's taxed in the year you can actually use it.
Okay, so that's you. But what about your employer? Why do they get to play by different rules? Well, this is where the accrual advantage comes in, and it's a pretty big deal for businesses.
So, remember, businesses run on an accrual basis. That just means expenses are recognized when they happen, not when the cash actually leaves their account. The second they officially declare that bonus and put it on the books, boom, for them it's a real expense.
And this is why it's such an advantage. It means your employer can deduct your bonus as an expense in the year they declared it, even if you haven't been paid a dime. So they get to lower their taxes for year 1 while you're still waiting for the money to show up in year 2. Pretty smart, huh?
Okay, so you're on cash basis, they're on accrual basis. Simple, right? Well, not always. There is one big exception, a scenario where the rules totally flip and you need to know about it. And here it is, straight from the source. The exception kicks in when a bonus is paid more than 3 years after the end of the year it was declared. Basically, if they make you wait too long for your money, the government says, hold on a second, we have a special rule for that.
So the number you have to burn into your brain is 3 years. If the payment is delayed longer than that, it gets a fancy new name, a salary deferral arrangement. And when that happens, everything we just talked about changes. Let's just walk through this so it's super clear. Imagine your company declares your bonus in year 1. Then you wait all through year 2, all through year 3, and you finally get paid sometime in year 4. That long delay, that is exactly what triggers the special rule.
And here's the crazy part. In this specific case, the rule completely flips on its head. That follow the cash rule for you, it's gone. Now, the bonus is included in your income in the year it was declared. Yeah, you heard that right. You'd have to account for it back in year 1, even though you didn't see the money for years.
Whoa, okay. I know that was a bit of a mind bender. We've got 2 different systems, one big exception. So let's boil this all down. Here's your quick and dirty cheat sheet to make sense of it all.
So let's recap. Nice and simple. Your rule, most of the time, you're taxed when you get the cash. Easy. Your employer's rule, they get to deduct the expense when they declare it. That's the basic mismatch. But then there's the big one, the 3-year exception. If your bonus is paid more than 3 years after it's declared, the rules flip. It becomes a salary deferral arrangement, and you get taxed all the way back in the year it was first announced.
So, now you know the rules of the game. And it kind of makes you wonder, doesn't it? Does knowing all this change how you might think about your next year-end bonus negotiation? Something to think about. Thanks for tuning in.